The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good afternoon, folks, and I've posted into Tiger TV a commodity chart. It happens to be the chart of live hogs. It's a weekly chart, going back about 6 years. What's interesting about this is that if you'll notice the bottom that was made, that butterfly bottom, when hogs were trading at 41 cents a pound, which was about 14 cents under the cost of production back in '09, we have now gone to the top where we've gone up 3 times the price of the hogs, where they got to 130 something and change, and you'll notice that the market's had a huge sell-off from that point. Well, you don't have to trade hogs. I just want to show you another pattern exactly like this one that deserves our attention. And if you'll give me a second here, I will pull it up, and we will take a quick look at it, and you can make up your own mind as to what you want to do, as you always do, but it'll be the same pattern. It's just going to be a daily pattern instead of the long-term weekly, but it's still a very good pattern. And this pattern has a lot of things going for it, because we are at the we're up actually 10 days up, which was the same as we were the last time we had a run up in this. And this is the NASDAQ that we're going to be looking at now. We're making that same 3 drive to a top pattern up in this area, but there's something even more significant, I believe, today, and that is because we are at the 786 retracement, and I mean exactly at the 786 retracement at 40, came in at 39.5 is the 786 retracement on the long-term monthly chart, going back from the high that we made in 2000. Now, you hear on Bloomberg and CNBC that the NASDAQ is making 14-year highs, and that is true because of the fact that we made this early in 2000, and if you take the 1999 high and use that as the spot, it's not making a new high. But if you take the top from 2000, which is pretty much right where we are right now, it's the same thing. And here again, we're seeing just a lot of people, bringing the bullishness to the market, and it has been bullish. There's no question about it. All I can tell you is we're seeing that same pattern. Excuse me, in the NASDAQ that we saw in hogs, and we see it in a whole lot of other things at the same time. Now, the one chart that I'm really watching, wow, I cannot believe I got a frog in my throat. Just a minute. The frog is going to leave in 1 second, and then I'll be able to continue. Okay. Now, the next one I want to take a look at here is the VIX index, because we are at a point where we are really, really close to a major bottom, in my opinion, in the VIX, which means that we should be topping in the stock market. Well, we haven't even taken out the lows of Monday yet, and here we are coming into Friday, and we haven't taken Friday's lows out yet. So we want to watch the VIX at around 1180. My strategy today is, if we see a trade at 1180, down about 20 cents from where we are now in the VIX, that would be the spot where I would say, okay, let's take a look at these indices and see whether this is where we want to take a place to be short, because I'm trading, off of patterns and ratios. I don't really understand the fundamentals of what's going on with these things, but I do understand, the patterns and the ratios, and that's been my forte that's kept me alive through these crazy years. Been quite a bit. I have a real interesting story to tell you. Yesterday was a very, very fun day for me because it was a historical day. It was the day that Google became an IPO. At that time, I was training the wife of one of my really good friends. He's quite famous, and she came to spend a couple days with us and to trade with me. And Google was coming out that day, and she wanted to buy Google. And so we figured out where would be the good price to buy Google. I believe it opened at 85, and it had a pullback to 69 3/4 sometime during the first few hours of the day, because I remember the price of 69 3/4, and she bought 2,000 shares of Google at 69 3/4, and then we flew to Las Vegas. That was a Friday. We flew to Las Vegas to go to the money show that was a Saturday and Sunday that they have every year there, and it was a fun show to go to and everything like that. But what happened was, by the time we got to Las Vegas, the price of Google had gone to 135. And she made like $8,000 on the trade, and I never asked her what she wanted to do or anything. I mean, she knew she was a good stock trader. She just didn't trade Forex and futures, and that's what she was here with me. And she sold the stock at just a little under $600 sometime 4, 5, 6 years later. I forget exactly when it was, but it was a huge gain, and she's still trading to this day, but I don't think she's had any moves like that one. That was amazing. Now, let's take a quick look here at this VIX chart, because this is really interesting. During this last run-up that we had into July 24th, when the VIX came up to 1,700. Remember, it moved 60% from its low at 10 up to 17, and now it's pulling back to the 786, and it's taken 2 weeks to do it, and it's been very orderly. This should, if you believe in the VIX index, and I think Basil does a good job of describing it, you really need to watch it, because we haven't even taken out the lows of last Friday yet, and look how much higher we are in stocks. So we have to keep that in mind as a potential timing mechanism for this, for this particular move that we're watching here. Now, I want to show you a stock chart that I believe is. Hold on just a second. Is a really good example of technical analysis, and it'll only take me a second here if my little old eyes will focus on what it needs to see. I think I'll be okay. The $64 question is sometimes they don't. Oh dear, I'm having a senior moment. I'll have to sing to you for just a bit here. Oh shucks, where is it? I think, is this it? I don't know. Yeah, this is it. Yay, I found it only after a few seconds. This is not too bad. Okay, folks, this is a come to Jesus move. Let me show you. There we go. This is the stock of Home Depot. It's made the big, large ABCD move here. And what we're doing now is, you see the market gapped up really strongly yesterday on good earnings, which should not have been a surprise. The stock had been going up forever. Why would it not have really good earnings? So the thing that we want to be watching is what happens from the next spot, what's going to happen with the thing. And what I want to show you here is the emotionalism in these markets that occurs, because if you'll see what's happened here yesterday with the good earnings, the stock was at an all-time high, trading at 84 and change, and then all of a sudden with the good earnings, the stock opens 5% higher on really big volume, and is completing the ABCD on the long-term yearly chart. Folks, this is what I refer to as a come to Jesus moment. Everybody all at once really wants to own Home Depot. Now, nobody wanted to buy it when it was trading at 73. They didn't want to buy it when it was trading at 75. They didn't want to buy it when it was trading at 77, but they want it when it's at 88. So this is how markets make a major top. What I'm saying here is that you've got a huge gap here in Home Depot, and this is a very, very large stock. trades huge amounts of volume. You don't see many gaps on the chart, especially one like this, and this is certainly an exhaustion gap. So the best way to trade this is if this VIX index starts to turn, is to buy a put on Home Depot, and you could buy probably an 84 put, which just takes you back into the old high area, and it would probably not cost very much. And if you put a strike price into it into September, you got a whole month to work with it. So you're assuming that something might correct into that gap, and so your risk would be very small. The other way to handle it would be to sell the stock pretty much where it's trading now, in this 89 area, and then just put a 3% value of that, which would be $3 a share, and use that as your stop. So your stop would be up around 91 or 92. So that's what it's doing. Now, it's it's a very interesting stock from that potential to do that, but we've got others that look very, very similar to this, and one of the famous ones that we have, of course, I don't do many stocks on this thing, because I know you folks are mostly rely on me for my experience in futures and in Forex, but one stock that we've been really accurate with over this past year or so has been Apple Computer. And if you remember at 385, when we were making the big ABCD on the weekly, we were nobody wanted to buy that stock, and yet look where it's at now. It's back to the old high. We're making a double top because it split 7 for 1. So if you multiply 7 times where we are now, we are back at that old high that we made at right around 703 a year and a half ago. So that's a huge double top. But if you'll notice that the pattern that you're seeing here on Apple now over the last several months is the same 3 drive to a pattern, 3 drive to a top pattern that we're seeing that we saw in Live Hogs. We're seeing it in the Nasdaq. We're seeing it in Apple. So these are really valid patterns. Now, what's interesting about Apple here is that if you look at the low that we made on the 15th of July, the market went up for 9 days. Into the 29th of July. Then what it did, it came down into August the 8th, and then we went straight up to where we are now, and that's also 9 days. So we have price and time coming together in Apple here at the 100.80 level, and it's making a double top from where we were, and everybody is getting wildly bullish again. And so this is another way that do the same type of thing. Look to buy, a 90 put, August or April 90. Let's try September 95 put, or to just sell the stock outright with a $3 stop, risking just 3%. And you got a lot of things going for you here. You're 9 days up in the move. You were 9 days up in the move before it corrected 5%. Back into August. So this is the types of trading setting ups, that we're looking at. Now, I get questions about, well, you're trading against the trend. Well, of course I'm trading against the trend because it's pattern recognition and it's leading indicators.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. We we've just launched one of our best Tiger Dollar sales ever. Right now, you can get a 40% bonus on any Tiger Dollar purchase through Sunday, August 24th. That's right, a 40% bonus. If you're a current subscriber, then this might be the easiest 40% you can make all year. And if you're thinking about subscribing, then get your Tiger Dollars now with a 40% bonus. They never expire and can be used for any TFNN product or service. For all the details, visit TFNN.com and lock in your 40% Tiger Dollar bonus today.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and we're taking a look at the New York Stock Exchange Index, which is the broadest indicator that I use for looking at where stocks are. And as you can see, we are above the 61% retracement. We are matching the highs that we made yesterday. So that market has gone, higher than the 61%. The next level, of course, would be the 786 level. Well, we had a Bradley date yesterday, and nothing has happened as of yet. But I wanted to put in the Dow Jones Industrial Average, because we are making a 786 retracement in the Dow Jones here, right where we're trading now at 16,952. So that's right at the 786 retracement of the whole move down from July 23rd to when we came down on August the 4th, and then this 2-week rally back. So far we're at the 786. So we've gone above the 786. In the S&P 500 by about 4 points. The cash S&P has also gone above it by a few points. The New York Stock Exchange Index has gone above the 618 by just a small amount. And, of course, the big one, the market on steroids, the NASDAQ has made a 3 drive to a top pattern at a 1.27 expansion so far. That doesn't mean it can expand to 1.618 and even higher, but we're just saying today is going to be a real interesting day for several reasons. The fact that we're making these patterns, completing, and the other thing is that the Bradley model, it could be a day off as far as the day that it's doing, and the Dow being right at the 786 could or could not mean something. We don't know. But if the market does, sell off from here, this would be a very key date, and you'd have to really, respect that VIX index once again, because each time that it's hit these major numbers, that's been the turn in the market. And where we are now is right at that 786 retracement. We're not quite there yet. That number comes in at 1185, and we're trading at 1203 right now, so it's still a little ways away. So we might get one more push to see what that's doing, and that's what I'm waiting for, is to see if that VIX index can hit that number, because I've got my alert set up, and I want to be able to go in and say, all right, this is where I want to, make my stand, and that's what I'm looking to do, and that's how I trade this. When we left, we were talking about the trend of the market, the fact that these things are making, 3 drive to a top patterns, and they seem to be very risky. But folks, if you go back and look historically and ask yourself the question, when was the best time to enter? And then you'll invariably say, well, it was at this point right here. Well, that point right there happens to be a 3 drive to a top pattern, which is one of our patterns. It's at the 1.27 level. It has equal time and price. And so you add those things together, and it's far better than if you were trading for another way of looking at a 50-day moving average or something like that. You're right at the moment of truth, because pattern recognition is a leading indicator. It's not a lagging indicator like oscillators. This is a leading indicator, and unfortunately sometimes it leads you into a wrong trade, and that's why you use stops to protect yourself from getting hurt. And believe me, you lose a lot, but you're also going to have some winners, and therein is where you make your difference. So it's just probability thinking, folks. That's all it really is. That's the only thing. I was listening to a gentleman calling in to Basil on the show before, and had a position that wasn't working, and it reminded me of an old adage that says it's much better to be out of a market wishing you were in than in a market wishing you were out. And we've all been in that type of environment before, folks. So just remember that having no position is a good position, because what you're doing is you're waiting for the probability trade to set up. You don't always have to be in the market. You really don't. If things aren't working, you just wait till you see something else getting ready to occur, and then you're on the way to success. That's basically what it looks like from my perspective. So just remember, if you don't have a position, that's actually a good sign, because you're waiting for something, that you can see that'll give you the edge that you need, that will get you, more profitable than not being profitable. That's the bottom line of what we're looking at. When we come back from the break here, I want to talk a little bit about the gold market, because we are at the proverbial moment of truth in gold. It's really starting to give us a little trouble here. See, we got the Dow up about 32, and gold is down a few dollars, and silver is up about 8 cents.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped, and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com, educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I posted into Tiger TV the XAU, which is the gold-silver index chart, and as you can see, we've had a really big move here from that 80 level up to the triple-digit level in this, and we're staying above the 382 retracement for quite some time now, so it looks very, very bullish. However, the gold and silver are beginning to roll over and are starting to look a lot more bearish than they are bullish. I've posted the chart of the gold and silver together on the hourly chart, and as you can see, silver has made substantially lower lows than we were just a week or two ago, and gold is still holding above it, but we're approaching the 786 retracement of those lows right now. So it's a very interesting phenomenon here, the fact that silver is so much weaker, and we've been pointing this out for some time. Now, how will this affect the XAU? I'm not sure, because that's an index of stocks that are, that produce gold and silver, and the gold and silver are the actual commodities themselves, and there's a cash market for both of those, and so those are affected a little bit. But right now, just the overall price action tells us that silver looks like it could be heading to at least below $1,900, and if gold breaks the 1290 level, we could be looking at somewhere around 1260 to 1240 in the gold market should that happen. Whether that is going to happen or not, I don't know. All I'm saying is that these charts are looking relatively negative with these lower tops and lower bottoms, especially in silver, and we've had the lower tops in gold. But even a war, whatever it is, nothing has made this thing pop up. So it's got some sellers over the market at all times. They're not afraid of a war in the Ukraine or any other thing. So you've got to keep that in mind, when you're doing this. I had an inquiry from one of our folks here at the listeners here at TFNN. They were kind enough to send me an email from Zero Hedge Fund, and it basically described what's been happening in stocks over the past 2 years, where the hedge funds and the private banks have bought $29 trillion worth of equities over the last, I think it was the last 2 years, $29 trillion. And he told me in this email, he said, now this is why the market cannot go down. I know your patterns look interesting, but it's not going to work this time because this $29 trillion is just too much. And I answered him back with a very, very simple question. And if anybody can tell me the question that I asked this young man, I will send them a prize. So the first person in the Tiger Den that can tell me what that answer is, I will be happy to send them a nice prize. Very expensive, I might add. I'll even hand wrap it and make it easy. Nobody seems to want to answer the question, so I asked him, I said, my friend, that sounds really interesting on the $29 trillion. The only question that I have is, who sold it to them? Because for every buyer, there has to be a seller, so somebody sold $29 trillion worth of equities. Now, that is what I would like to know, is who sold it. I know I can see the market's gone up. There's no question about that. But if this is in fact true, and I'm not even sure that it is, because we are the last people to know if there's any inside information out there, that's for sure. So we'll see. Now, the Fed doesn't buy equities as far as I know, but maybe they've changed that and are buying equities now. If that's the case, we're in deeper trouble than we actually realize. So we'll see what happens here. But anyway, I just was curious, when you read these things, try to go behind the lines to understand, what you're trying to to what someone is really trying to tell you, because it's just like a Bernstein and Woodward when they caught Nixon, with that deep throat stuff back in the Watergate scandal years of 1973. It's follow the money, and that's pretty much what we're doing. This experiment that we've had with the Fed, we've never had anything like this before, and of course they've tried it in Japan, and they're trying it in Europe also with their central banks. And I still believe there's something not right here, but, who knows? We'll just see what happens. Just keep trading the patterns and you'll be okay. Well, there was someone saying 29 trillion seems totally out of proportion to GDP. That was my second question to him that I didn't put in there because I don't follow the economics of this. And I've got a master's degree in business from Indiana. I mean, Charles Schultz was the dean of the school there. He was Secretary Treasury under Reagan, I believe, and he was the dean of the business school when I was there. And we had some really important people coming there. John Galbraith came, and a whole bunch of other people. Milton Friedman, and but I just don't understand the supply-demand fundamental stuff. I can tell a chart. If prices are going up, there's more buyers. If prices are going down, there's more sellers. That's the bottom line, and that's what I'm really trying to look for. The secret is you got to tell yourself when you're wrong. It's that's the real problem, is you got to determine not when you're right. It's you got to determine when you're wrong. Being right is simple, because the market's telling you you're right. It's giving you money. When it's taking it away from you, that's when you have to act as a trader. You got to be there, protecting yourself, and that's the key to this whole business of speculation. It's all about money management and probabilities, folks. That's really what trading is about. the problem with these hedge funds and mutual funds and stuff like that, none of these guys have any skin in the game. I mean, some of them have a percentage, of course, but they don't have their real family money, tied up, in a trade, much like what Gloria did when, she bought, Google back in, 2004. That was real money. That was hard-earned money that she was responsible for. It was her own money because she was an attorney and she made a very good living, but it was her decision to do this, and she certainly made a great deal of money off the trade because of what she decided to do. And that's why you have to have a plan of action when you're trading. That's one of the reasons why most people lose every day. They come in with no plan of action of, what they want to do. And my plan of action today is to sell the NASDAQ. And look, the NASDAQ is not acting that strong. It's only taken out yesterday's high by 2 points, and it's trading at 4,041. And yesterday's high was 4,041, and today's high has been 4,043. So, that's not actually running away. It's not like the market of 2000 when, these tech bubble things were going nuts. And even Apple is not going crazy. So these are the ones that, I'm trying to look at. I'm just trying to show you some of the patterns that I'm looking at. Remember, again, these have nothing to do with the fundamentals of what's going on. And I know that the Federal Reserve is meeting in Jackson Hole. Why they don't meet in a less expensive place, I don't know, but that's their money. Well, it's actually our money probably, but anyway, it's their boondoggle, so let them enjoy it. I do like Jackson Hole very much. I think it's one of the most beautiful places in the western United States. If you ever get a chance to go there, it's really fantastic. I have a quick story to tell you about Jackson Hole. My nephew, Larry, my daughter's youngest son, he was a All-American football player at the University of Indiana, and he played for the the Indianapolis Colts for 1 year before he was injured. But his girlfriend was from California, and they had a home in Jackson Hole, Wyoming. And so over the Christmas holidays, when he was a senior at Indiana, he went back to Jackson Hole to be with the family. And one morning he was out in the front yard making a snowman with two little kids. And he's always loved children, and he's a big, he was a huge kid. He's 6'6", but anyway, he's working on this snowman and stuff, and he spends about 2 hours with these little kids that are like 8 or 9 years old, and their mother came out and said, "Come on in and have some hot chocolate." Well, it was the house right next door, so Larry walked over there and sat down and had stuff with chocolate with the kids, and he came back to the house and he told his girlfriend. She said, "Boy, he says that lady looked really familiar. She was really nice, but I don't know who she was, but she was really familiar." And Tiffany's mother said to her, she said, "That was Caroline Kennedy." And, and she's, of course, married to Arnold Schwarzenegger. Well, he goes to the health club that afternoon, and Bruce Willis was there, and so was Arnold Schwarzenegger, and it was really, he's not accustomed to stuff like that, so he was sort of blown away. The only comment that he made is how short both Arnold Schwarzenegger and Bruce Willis were. Well, when he's 6'6", everybody's short. But anyway, that's a little story. I don't mean to regress, but I got to tell some stories here. Otherwise, this stock market stuff is actually pretty boring. Okay. Now, we need to talk about the bond market here, because the bond market has been selling off since that huge ABCD pattern that we had just last week that we've been waiting for. We got up to that 141 level. And what I'm going to do now is to bring this up so you can see it again, because we started to sell off here relatively mildly, which is good because we're only down 3 days from that high. And that's telling us that this market is still holding some real strong support up here in this 139, 138 level. But we've completed, the major 61% retracement, right spot on at 141.10. The high was 141. 16, and we backed off just $1,000 from that level just 3 days. Now, if we go into another flight to quality, we could have one more higher leg up, but we're still waiting to see if that is going to have any change on it or not. The Treasury notes are doing the same thing. The interest rates on those have started to rise a little bit, and we'll see, how that's going to transpire. Now, remember when we were talking last week about the VIX index, and we were listening to Basil because Basil is the master of it. But for some reason, the reason I'm bringing this up, someone asked me the question, is why does the VIX have this technical capability of, predicting market turns? I don't know. All I know is that it hits these Fibonacci numbers, just almost like magic. I mean, when we went up 60% from the low in a matter of 7 days, and it stopped exactly at the 61% retracement at 1710, and now we've come down over the last 2 weeks, and we're setting at the 786 retracement on the downside at 1180, which is down another 50%. So that's actually a 786 retracement of that move down. So we're having really strong increases in volatility that we're just starting to see. And we're in August now. This is still the holiday month. You can imagine when we come in after Labor Day, what's going to happen with some of this volatility when the traders get back, because it's already telling us that, hey, it's not going to be as easy as, just buying and holding like it was. So it's going to be very, 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 very volatile coming into April. Let's try September. And that's what I assumed has happened. And remember, September and October are two of the strongest months for being bearish. In fact, they stand alone as being the two bearish months where the market usually makes a significant low are September and October. So whether those statistics will work this year or not, remains to be seen. So we'll see. Someone's asked me asked me a question about my childhood, but it's just, I was born in Indiana, folks. I lived there for 21 years. When I got out of pharmacy school, I took off, and I go back all the time to visit my sister and my nephews and nieces and stuff like that. I still have one great aunt that's still alive. It's 101. But it's, I just grew up in an era that doesn't exist anymore. It's unfortunate that it doesn't, but it was a time totally different than what we go through now. My little 3-year-old grandson can actually operate his father's iPhone, his apps, to pull up the YouTube videos and stuff to see, he and his brother, who's now walking, and they send these to me, and he's only 3 years old. I mean, I got a $10 phone from Walmart that doesn't even do text messaging, and here's a 3-year-old, and I think it's wonderful because the tech stuff is here to stay. I have one regret in all these years doing this, is that I didn't think color TVs were here to stay, and I said I was wrong about that. I didn't believe about microwave ovens, and here they are to stay. And I've questioned computers all these years, but as of today, I think computers are here to stay. We'll be back for a minute. We'll wrap up the stock market, and I'll stop that.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders, take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Up next, the Diagnostics Trading Hour with Daryl Martin here on TFNN.
Okay, we're back, folks, and we've got a commodity that is true that all of us use. That's crude oil, and we are right at the 786 retracement that we talked about on last Thursday's report when we had Rich Anderson as our guest. So we should be at really strong support here at $95 a barrel in the crude oil. However, if we go below 94, that's going to set up much lower prices. We're in a very oversold condition in the crude oil market. We're down a month. We topped, right around July the 22nd, and here we are on August the 20th. And so we're coming back, 1 month we've been down hard from 104 down to 95. That's $10,000 in a month. So that's a considerable amount of change, and that was coming off of a 61% retracement at that 105 level. So we are at the proverbial moment of truth here in this crude oil, and there's some cycles that are in there that look interesting from the April to January and January to August. We've got a 7-month cycle that's lined up to come in around this time frame, so we'll see if that's going to be the case. But this is, I said yesterday was a key day. We really haven't gone much higher in the NASDAQ or the S&P or the Dow Jones very much. I mean, they're up a little bit, but, they're not running away. And that Bradley date was yesterday. It could be off by one day. Whether it's going to be right or not, we'll have to wait and see, but we'll just follow it as we go through. Folks, the key thing to watch today for your portfolios and stuff that I think is really instrumental is to watch that VIX index, because it's been really good at calling turns, and we've got a lot of these numbers that are coming together with the NASDAQ, the 3-drive pattern, and the 786 on the monthly, and the 1.27 expansion of that. The 786 retracement in the Dow Jones, in the Dow Jones, the 786 retracement in the S&P. I don't know. If they're up 10 days in a row, that makes it an outlier event. The odds of it going lower today are better than 8 out of 10. But whether that happens or not, we'll wait and see. Just be really careful in here. And believe me, you'll be able to buy the dips. There's going to be lots of dips. We had one in July, we had one in August, and we'll probably have one sometime in September. Maybe we'll have a 2-day sell-off in stocks. So we'll have to wait and see. After we get the news from the Federal Reserve today from Jackson Hole, they might be able to send each of us a $10,000 check like they did for the big banks. I'm going to stand by the mailbox today, or this first of the week, just to see if it comes in. But frankly, I'm not so sure that that's really going to be happening. But we do have some interesting things happening today, and especially I'm very, very friendly. Trading wise for gold and silver, and I was really bullish a couple of weeks ago in silver and gold when we had the rally, but the rally stopped at lower highs, and now it's breaking down badly, and anything below 1290 in this gold is not going to be good. And we got a long-term weekly chart target in silver at 1790. That's almost $2 an ounce from where we are now. So don't stand there. Remember that adage, it's much better to be out of the market wishing you were in than in a market wishing you were out. So, keep that in mind as you do this. Watch this level here in the NASDAQ at the 4,044 level. As long as we don't close above that, I think this is going to be a significant high where we get at least a 5-day correction into this market, because we are so overbought. We've been up 10 days in a row, so 5 days would just be a normal retracement. So live every day in an attitude of gratitude, and may God bless, and do something nice for someone who has a lot less than you today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.